The dollar continues to be eroded out from underneath us. And in a government that in the last 4 years has printed more money than in the history of the United States prior to it, yeah, it's a big deal. It's a trend that's not showing any sign of abating. In fact, at $1 trillion of debt every 100 days, trillion seconds ago, Kai, was 31,688 years ago. We are addicted to spending. The future of the dollar is in trouble, and that's why we own gold. The new BRICS settlement currency called the unit, which will be 40% gold-backed, which will be deliverable if requested, and be traded on Project mBridge. And so when you talk about the need for gold, it's extraordinary.
Gold has been the standout commodity performer so far this year, gaining 18.5% and posting a record high. The World Gold Council released its quarterly report last week, and the industry group reported total demand of 1,258.2 metric tons in the second quarter, the highest on record for a second quarter and some 4% above the same period in 2023. Andy Schectman of Miles Franklin consistently observes that throughout history, gold and silver don't necessarily increase in dollar value. Instead, it's the dollar that loses purchasing power. In his discussion on de-dollarization, Andy delved into the specifics of Project mBridge, a cross-border payment system developed in collaboration with the Bank of International Settlements. De-dollarization is high on the agenda of BRICS, which is rapidly becoming the world's largest economic bloc. Until 2022, BRICS had few clearly defined goals apart from a shared desire to develop a counterweight to the G7. However, the weaponization of the dollar system and the freezing of US $300 billion in Russian reserves held in Western banks gave the group a sharp new focus and purpose. In May this year, the Association of Southeast Asian Nations, ASEAN, announced plans to de-dollarize their cross-border trade and use local currencies instead. The announcement made few global headlines, but ASEAN is a huge trading bloc comprised of 10 countries with a combined population of 600 million people. Schectman emphasizes that it's not that the price of a house or gold has increased, it's that the dollar's value has diminished. He likens gold to a solid object resting on the edge of a bathtub. As the dollar's value, the water, drains away, gold remains constant, making everything else appear to rise in value due to the dollar's decline. This, according to Schectman, underscores the importance of owning gold. Before we explore further, be sure to subscribe and click the bell to stay tuned for more engaging content.
Well, and that's one thing that we find throughout all of time is that gold and silver don't go up in dollar value. Well, they do, but it's not that gold and silver are going higher. It's the dollar is losing purchasing power. So if we go back to 1971, when we left when we delinked gold, when Nixon closed the gold window, gold would have been $35 or $42 an ounce. In 1971, a brand new Corvette Stingray would have cost you $6,000. Now it's $105,000. So what happened? Did the Corvette become more expensive, or is the dollar worth less? And when you talk about what's happened to the value of the dollar over an extended period of time, it continues to lose ground. We're told that the Fed strives for 2% inflation. But why not negative 2%? Because the lower the inflation rate, the higher their standard of living. And the 2% that they tell us about, Kai, is a bunch of nonsense. It's phooey. Interviewed John Williams of Shadow Stats once, and he'll tell you that the real number is 11 or 12%. So the bottom line is simply this, is that the purchasing power of gold and silver remain constant, whereas the dollar that we measure things against continues to be eroded slowly but surely from underneath us. And, I'll give you an example, and this is from memory, okay? I used to talk about this all the time. In 1960, the price of gold was $39 an ounce. And that was the average price of gold. And a house, according to the Census Bureau, was $17,000. Now, from memory, I will tell you that's 435 ounces of gold. So let's pretend that grandma and grandpa left 435 ounces of gold for your parents. And they said, look, what do? Do we buy a house right now with the gold that grandma and grandpa gave us? Or do we stick it under our mattress where it will earn nothing but dust? Right now would be 64 years ago. And let's just say let's just pretend that they decided to take out a mortgage and pay for it other ways and stuck the 435 ounces of gold under the mattress, which right now is about $1 million plus. The average price of a house today, let's call it $400,000. Back then it was $17,000. So if you realize that now gold earning nothing but dust for the last 60 plus years would buy you two houses fully furnished, gold can actually accentuate in value, but the moral of the story is that it retains and preserves purchasing power, as a house that would have been 17,000 is now over 400. So did the house become more expensive? Did gold become more expensive, or did the dollar that we measure everything against become worth less? Gold is sitting on the ledge of the bathtub. When you pull the plug on the dollar, it's not that gold got higher, it's just that the dollar that we measure it against fell further and further and further, and you're looking up at the value of gold. The house would have been a sponge floating on the surface, but the point of it is that it's not that the house got more expensive, it's not that gold got more expensive, it's that the dollar continues to be eroded out from underneath us. And in a government that in the last 4 years has printed more money than in the history of the United States prior to it, yeah, it's a big deal. It's a trend that's not showing any sign of abating. In fact, at $1 trillion of debt every 100 days, trillion seconds ago, Kai, was 31,688 years ago. We are addicted to spending. The future of the dollar is in trouble, and that's why we own gold.
Andy Schectman explained the relationship between Project mBridge and the unit, outlining what these developments mean for the U.S. dollar and gold. In June 2024, the Central Bank of the UAE, together with the Bank for International Settlements Innovation Hub Hong Kong Center, the Hong Kong Monetary Authority, the Bank of Thailand, and the Digital Currency Institute of the People's Bank of China, have launched the Minimum Viable Product (MVP) platform of the Bridge Project, a multi-central bank digital currency common platform for wholesale cross-border payments and settlement. This is the first multi-CBDC platform that has reached the MVP phase and is ready for early adopters to use. Dilma Rousseff, former president of Brazil and current head of the BRICS New Development Bank, announced that a new BRICS settlement currency called the unit has been agreed upon in principle. This currency, 40% gold-backed and deliverable upon request, will be traded on Project mBridge, a cross-border payment system developed with the Bank of International Settlements, BIS. According to Schectman, this highlights the growing demand for gold. Now, let's delve into the video.
Just came out, Dilma Rousseff, former well, she is now, I think she was the president of Brazil, if I'm not mistaken, but she is now the head of the BRICS New Development Bank, who came out publicly and said that it's been agreed upon in principle, the new BRICS settlement currency called the unit, which will be 40% gold-backed, which will be deliverable if requested, and be traded on Project mBridge. And so when you talk about the need for gold, it's extraordinary. And maybe that coincides with the fact that they publicly said we've stopped accumulating gold for a month or two. At the same time, they struck a deal with the big bullion banks. For me, it would be gold. But it's commodities, Kai. They realize that this is, as Zoltan Pozsar says, Bretton Woods 3, a system all about commodities. And I think whether you realize that they bought the London Metals Exchange a few years ago, which are the base metals, the copper, steel, zinc, they're striking deals all around the world in underdeveloped countries in in Africa and South America for any type of resources that they can help industrialize and help these countries bring these natural resources to the market, or even soft commodities, buying grain and corn and soybeans from Brazil, and anything that they can get their hands on that are tangible, let alone buying gold and silver at levels the world has never seen, and being the largest producer of it too. So I think they understand that this is all about commodities. My guess would be it would be gold or some other very important commodity, but gold probably would be at the top of the list. What's interesting is Project mBridge, which, by the way, does not support U.S. dollars, where Saudi Arabia just became a full participant in the Project mBridge, which is a big deal. It's
with the Bank of International Settlements, correct?
Yeah, yes. And who reclassified gold as the only other tier one asset? Oh yeah, that's right, it's the BIS. And when you talk about this being a BIS project, originally the 4 charter members would have been China, Hong Kong, Thailand, and the United Arab Emirates, and now the BIS behind it, who reclassified gold tier one. They said, in principle, Dilma Rousseff did come out and say in the last meeting that they had in St. Petersburg that yes, indeed, we have in principle agreed to a new settlement currency called the unit, which will be 40% gold and 60% a basket of the BRICS currencies. And what's interesting about it, too, Kai, is that they talk about the unit being a tool that will be immune from sanctions, as will Project mBridge. But the interesting thing about it is that if you read the white paper on the unit, it talks about the fact that the gold that we'll be backing will be held within the borders of all of these countries. They don't have to send it anywhere, a central common location. They will need to be audited, and there are stiff penalties for not adhering to the guidelines of the protocol of the unit. But when you realize all of these countries are not only buying gold massively, but repatriating it. Look what Saudi Arabia and Egypt just did, in a handful of African countries, brought all their gold back from
India.
And India bought 1.5 times the amount of gold they did all of last year and brought it all home, plus 100 metric tons that they've been holding since 1991 at the Bank of England. You see, all of these countries would leave their gold at the Bank of England to access safely the LBMA, have it held safely in a country with rule of law and the whole 9 yards. And COMEX would be the New York Fed. And so all of these countries like Saudi Arabia, like Egypt, like all of the African countries, on top of the German Bundesbank, on top of Hungary and Turkey and Poland and Austria and the Czech National Bank, the Dutch, they all brought their gold back from the New York Fed and the Bank of England. So what this Project mBridge allows, and remember, Saudi Arabia is now a full participant in it, it allows for the cross-border payment system where each one of these countries will be able to retain their monetary autonomy, their monetary authority. There's not a common currency, but a common settlement currency. So everyone keeps their own currency, can trade over Project mBridge, which sidesteps the SWIFT, settle in the unit settlement currency, which is 40% gold backed and is redeemable if they want. And so it really, what it does, it lights the fuse on the dollar bomb. And at the same time, it really curtails the need or the incentive to own U.S. treasuries, which can be weaponized. And this is why I think we're seeing all these countries buy gold, Kai, because not only has gold since 2000 outperformed the 10-year treasury by double, it has no counterparty liability. It cannot be taken or confiscated the way that the treasury market has been proven to be weaponized.
In 1974, the U.S. national debt was $485 billion, or 31% of GDP. Today, it has skyrocketed to over $35 trillion, representing 120% of GDP. This growing debt is weakening the dollar's position in international markets, especially as the United States' weaponization of the dollar backfires, pushing BRICS and developing nations away from dollar-based trade. Meanwhile, gold is hitting new all-time highs in 2024, driven by a surge in demand, particularly in the over-the-counter, OTC market. In the second quarter, OTC demand soared to 329.2 tons, a 53% increase from the same period in 2023 and a staggering 385% jump from the first quarter. Why is gold experiencing record demand in 2024? Your opinion matters. Drop your thoughts in the comments, hit the like button if you enjoyed this, and subscribe to stay informed on our journey together.